This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 23rd, 2016. Sterling dollar. So cable has made some important gains in recent trade, with the market taking out some key resistance. If you look back at the range trade that we've seen since pretty much the start of 2016, you can see the market is now violating the upper end of that range, breaking to fresh 2016 highs in early trade, up at 148.44 thus far. So at this point, it looks like the market could be carving out a major base, with the establishment back above recent resistance around the 147.70 area, strengthening this outlook. This could then open the door over the coming days and weeks for a more measured move upside extension up towards the 158 area. At this point, given the signs of a structural shift and break of the range highs, any setback should be very well supported into some previous support around the 143 area. At this point, ultimately, only back below 140 would really compromise what could be a shifting structure favoring a bullish breakout over the coming days and weeks. Euro dollar. So the euro has been locked in some choppy consolidation over the past several days, though ultimately the market will need to break above 114.16 or back below 110.98 for clearer directional insight. A break above 114.16 will expose a retest of the 2016 highs at 116.17, which guard against more significant medium-term resistance at 117.10 further up. Inability to take out 114.16 followed by a break back below 110.98 will do a good job of putting pressure back on the downside, exposing next key resistance support at 108.23. Dollar yen. So dollar yen remains confined to a very well-defined downtrend, with the market now locked in some bearish consolidation ahead of what should be the next major downside extension towards a measured move in the 100 area. At this point, if we do see any rallies, they are classified as corrective and should be well capped around the 108 area in favor of the next downside extension. Ultimately, a break back above 111.45, that really current previous lower top, will be required to negate the current bearish momentum in dollar yen. Kiwi dollar. So Kiwi is making some impressive gains in recent trade, with the market pushing up to fresh 2016 highs. When you look at this market, it's interesting to see that we saw a breakdown all the way back in 2015 that took us down to around 61 before the market recovered up to 69 and then consolidated for a period of time. But that breakdown to 61 followed that by that eventual break back above 69 does suggest that we could see more significant upside over the coming weeks. The move from 69 down to 61 was an 8 big figure move, so the break above 69 suggests a potential 8 big figure move to the top side, which would expose 77 further up. However, the market is now trading into some critical previous support turn resistance if we look back to support in 2015, February and March, which could stall out this latest recovery at this point, especially considering daily studies which have traded into overbought territory. So it'll be interesting to keep an eye on Kiwi over the coming sessions. S&P 500. So the S&P 500 has rallied up from last Thursday's lows, though ultimately the structure here continues to show topping and exhaustion on rallies up above 2100. We saw the record high in 2015 at 2133, and since then it's been a very broad, choppy consolidation that continues to be well capped on rallies above 2100. So if the market can break back below recent support that we saw around 2050 and then take it down to 2020, below 2020 would do a good job of cementing this structural shift, opening the door for the next major downside extension back towards the 2016 base, just shy of 1800. If, however, the market can establish above the current 2016 peak at 2121, this will open the door for a retest of the 2015 record high 2133 and potentially more gains going forward. Gold. So gold continues to be very well supported on dips, and although we've seen a pretty impressive pullback from 2016 highs all the way back into the mid 1200s, any setbacks in this market should be very well supported, ultimately for sure ahead of 1200 in favor of the next major upside extension beyond 1316 and towards 1400 further up. Really only back below 1190 would compromise the newly adopted highly constructive outlook for gold.